Hey, may pips be upon you. Hey, listen. Try and go over this as briefly as possible. All right. This is I guess an update from the last video I did. All right. But this one will be nowhere near as long. All right. We're going to just go over this one trade. Gold. All right. Uh if you recall, I told you when price was down here, I said, this is the area of interest. And I went over in detail as far as, uh, uh, price was in this rather large uh, bull flag, descending channel, if you will. And, I just mentioned that, there was, hold on, and I mentioned that there was some confluences going on here. We have this horizontal level, which is strong support. All right, you see it being used. This is a key level that you see it being used as both resistance and support. And we also have the descending channel going into the same level. All right, these are confluences for folks, confluence of support. Now, and I said, when it gets down here, I've been saying it for a week in the chat room. When it gets down here, this is where we're going to look for an entry for as long as we see bullish formations or patterns. All right, and we went down to the 4 hour for looking for an entry. Once it got down here and it played down here, and if we go down to the 15-minute, we see where the entry actually came. And I want to point this out. All right, we saw that price broke below the trend line of the the support line of the descending channel. All right, we saw that. We saw it test the bottom. All right, we mentioned that as well, and we saw that it went into this range here, highlighted by these blue boxes. Okay. All right, this was the bottom of that range, but this is the actual range between here and here. And we saw it going back and forth. And I mentioned that it's going to go back and forth, and it's probably going to dip just high enough to get these stop losses that are above here where people went short, and it'll dip just low enough for people here who went long. All right, and what did it do? This wick here went lower than these two wicks, all these wicks here, and swept the stop losses and went up. All right, but this is the key area. The key area is here. All right, here is where price found that support, where we established found the resistance. Here it was support, here it turned to resistance. That's how we were clear, very easily identified this area. All right, and once we had a bullish a strong bullish break of this area, break of this level, and a close above this area, then we know that there's a high probability that price will continue up. And that's exactly what it did. And we hope that you caught the candle that opened right after this one closed. All right, this was the key candle here, our momentum candle. And I'm hoping that you got some of those pips, because as you can see, there was a bunch of them. Okay. And so that's the review on that trade. But I want to mention that, once we saw a price break above this, this is a very demonstrative show of strength in the market, a bullish strength. And you just have to know that if it was to break, when you break a well-established key level, where it was used for both support and resistance, and then you break that that level, you got to know that this is a strong horse to put a bet on. Okay, a long bet. And that turned out well. Now, here, let's talk about what do we do from this point. Let's go back to the 4 hour. All right, and let's get rid of that. That's over. All right, that dream is gone. All right, so for those that missed it, all right, how do we get back in this market? How do we participate in this market? Well, we got to first realize that there's a lot of room. Let's go to the daily. There's a lot of room. What happened each time price touched this trend line? Look here. We had a very, very bullish reaction. This big old pin, and then it goes on its way up. All right. This was a lot of pips. Then it came back down, and then to the same level. All right. Understand that. The same horizontal level. You could see it here. And then had another bullish reaction. It's a lot of tickets, a lot of orders here for where buyers are waiting. All right. Now, then we broke through that level and touched right here. Now, this is very key to me. Why? Let's look at this on the 4-hour. The reason why this is key is because this was the only other time that price touched this trend line. All right. And you can see the reaction here. Bow, bow. It's very similar to what we're going to see down further where we're at today. All right. What I want you to take notice is this bullish reaction here. All right. All this way with no pullback. You know, usually when you see an impulse, you want to see impulse, correction, impulse. And then you want to be able to measure from the bottom of that impulse, the start of it, excuse me, please. You want to be able to measure from the bottom of the move, the very start of the move, to the end of the move here, and see and be able to gauge how far the correction will come back. And with the Fibonacci, you can do that. What you expect is on an impulse correction and impulse move. On the correction, you want to be able to see the correction come back to at least the 38 fib, at least. That is qualifies as a pullback when it's that far. You know, sometimes it'll come to the 50, sometimes it'll come to the 618. That's a deeper pullback, and the deeper the better. All right. The 786 is the last line of pullbacks, you know, for a retracement. That's the last one. Once it gets past this, then you're thinking that it's probably going to continue lower. All right. Now, I say that all to say, excuse me, why didn't we get a pullback here? You see all this way here, no pullback. We got this. What is that? That's nothing. And then it keeps going on up. All right. So we're going to use that as a lesson, something to put in the mental bank, the mental bank. All right. When we get down here again, we have this long doggone. We get a touch here. It goes a little deeper, but we get that response, that bullish response, that bullish ICI. All right. The impulse correction and impulse. We got the impulse, but what about this correction? All right. Let's measure with our doggone fibs. I said doggone. Our doggone fibs. And we see that we're nowhere near the 382. All right. Do we really expect it to come back here and then continue up? That would be interesting. But there's no structure. There's no structure over here to line it up with. You know, you want to see the fibs line up with structure, because then you can have what they call confluence. All right. But this is the only structure over here. And we are already past, price is already going past that. This previous high, you would think maybe price would hit this previous high and then continue up. But nope, it's going past it. So we're going to get a deeper retracement. All right. But now we want to see what is the most likely place for it to land. Look left and we'll see our clues. See all this? See these wicks of rejection? and then you have wicks of rejection from up underneath. This area is starting to look a little interesting to me. Let's see. Maybe something like that. You see how price has a break here and then a continuation? You see how price came up and touched this area as resistance, how it touched this area as support, this zone as support here. This is an interesting area to me. So now I'm going to look over here to the left, to the right, excuse me, and I'm going to notice what are the whole numbers that are nearby here. And I'm gonna take a good look. I want to get a better look at this this area. All right. Let me go down another time frame. Yeah, it's starting to show us something. It is starting to show us something. Okay. Let me see. See to the left there? I'm going to go down to the 17.0. Let me see. 1708. I'm going to mark it. All right. 1708. Why do I mark that? I mentioned in my other videos before, whole numbers are where price likes to, where banks likes to do their business. They like to put orders 00, 50, and then you look for 20 and 80. All right, that's 00, 50, 20 and 80. Okay, I like this area. You see how price reacts at that area? So I'm gonna put this up here. I'm gonna move this box up here. And let's take notes. We used it as support here. We used it as support here, 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 here. Look how it passes through with a very strong bearish candle, then comes back up and retests it and rejects it as resistance. Then you see how price is respected here. We get the close here. Even though it probed higher, we get the close there. We get the close here as it comes back to test for as support. All right. And then you see this blue candle. It wicks off from here, respecting it as support. Here, we see it being respected as resistance as price bearishly passes by and retested up under it. And then you see the reaction, that bearish reaction from there. And then price comes back again. Look, in the same zone, we have a close, we have an open, and it comes back down, then comes back over with a very strong bullish candle. How high a probability, how reasonable is it to think that price is going to come back here and test and then go up? Now, it could very well pass through. Maybe it comes down here and forms this head and shoulders. But I'm thinking this may be more likely. This is going to be our area, 1708.00. All right. The 1708 line looks like we might see some action here. We want to look for a bullish formation and pattern, some wick rejections. All right. On the lower time frame, we'll be able to see it a lot more clearer. Say the 15-minute. All right, we're going to look for a bullish formation. We're going to look for wicks, some wicks away, wicks of rejection, and maybe an engulfing candle, a very strong momentum candle from here up and out. What did I just do? Okay. All right. Does that make sense? It seems to be reasonable to me. And also, let's look to the left here. Now, keep these what do you call these? The Fibonacci's in mind. Maybe when price comes down here, we may see a wick down. with a close right at the zone and then up. So keep that in mind, because I'm going to show you something. I want you to make sure we keep an eye on this here. This is one of the reasons why I like this scenario, is because of this this bearish close here. All right, I'm thinking price will recognize this zone and, you know, do its thing. But let's look at this EMA. The EMA is revealing. All right, you see how it's already up. This is the 382 Fibonacci level. It's already coming up past it. All right, so by the time price comes down here, price will be here. It'll be acting as dynamic support. That gives us another confluence of support. All right, along with this horizontal level. So this is what I'm looking at. This is what I'm looking at. This is what I'm thinking, and I think it makes sense. And we'll see what we get when we get to this area, our area of concern. If we get that those promising formations and patterns, you know, let's be ready to act. Also, let me make sure we keep in mind where our boundary lines are for this range. This is a good range here. I'm looking over here to the left as I'm drawing this to see if I'm near a whole number of some kind. What is that? Oh, wait a minute. 1719. All right. These aren't double zeros. That's not a 20. Where's my 20? My 20 is 1720s right here. Yeah. I'm looking for the 1720. And that'll do. All right. I'm going to mark that one as well. We have this range. Price has already come back up into this range. So we want to watch here. All right, we want to see how it lands, and that's probably going to happen between now and London. So I'm looking for a repeat of this action over here. You know, hopefully we don't see that, because that would throw off the plan, but we'll be ready to react if it does go like that, because maybe we're heading towards that and giving the head and shoulders. So these are the scenarios we're looking for. And I hope you, oh man, did I just do that? Okay, hold on, one more. Yeah, I'm hoping that we all can make some money off of this. And if you do, let me know. All right, holla at me if you got a question.